Hello, and welcome to another episode of TacoBytes, your daily bite of Degen, episode number 337, the inverse Kramer Bitcoin ETF. Oh man, today we have Matthew Tuttle from Tuttle Ventures joining us, the founder, the creator, the big brain behind the inverse Kramer, and a couple other things too. Matt, thank you for joining us today. How are you?
I'm great. Thanks for having me. One correction, it's Tuttle Capital. Tuttle Ventures is Darren Tuttle, who's no relation.
Oh, okay. Tuttle Capital it is. Yeah. All right. We'll deep into that. Thank you for that correction. Matt, man, I don't even know where to start with this. This was something that sort of happened out of the blue. You just sort of messaged me and to send me a mug, and my big words of wisdom is a closed mouth does not get fed. And I was like, hey, I run the worst Twitter show on the face of the planet. Do you want to come interview? And you're like, yeah. What tweet was it that I did? Do you remember where I talked about the inverse Kramer that made you reach out?
I don't. I mean, do you tweet a lot about inverse Kramer?
Maybe like once a month or whenever Jim touches on crypto.
Oh, then he recently came out positive on Coinbase, so could have been there. And then a couple of weeks ago, he was, he was flip-flopping on crypto a little bit. So, one of those.
Yeah, no, it was one of those things that, I've gotten into just whenever I see a Jim tweet that's just like the recession is never ending. I was like, oh, we're about to skyrocket. Let's go, boys. But you made the inverse Kramer, and it's not your first inverse ETF. How many ETFs have you created? And for those that are new, let's bare bones this a little bit as well and your history.
Yeah, I mean, over the years, I've been creating ETFs since 2015. I've probably been involved in the creation of like 25 of them. My history, I started trading in markets in the early 80s. So I'm, probably twice as old as everybody on your space. But then started working in financial services in 91, went out on my own in 2003, and started launching ETFs in 2015. Really, my passion, from working on Wall Street, seeing how the markets were and then how they became, I'm a big believer that the advice that most people get from Wall Street firms sucks, and the advice they get from the media is even worse. And so, my goal, passion, whatever you want to call it, is to take the other side of that stuff and, provide, because I'm a trader myself. I sit around, I trade all day. I want to create products that I want myself. And then we provide, education to people on trading. I've got a daily newsletter that's free where I put out my watch list and, what I'm thinking about markets. And if I remember, I'll tweet during the day. People also hit me up on Twitter. Hey, what do you think of this chart? What do you think of that chart? And, if I see that, I'll always respond. But that's me in a nutshell.
Okay. So you create things that you would want to trade. Why would you want to trade the inverse Kramer?
So I created both sides. So LJIM is the long Kramer, SJIM is the short Kramer. And the thing about Kramer, so one of the things I've noticed in all my years in dealing with the market is the consensus is usually wrong. Kramer is the consensus on steroids. And, and there's a few reasons for that, but the main one is that he's got to swing at every pitch. So, you can't cut, and, if you watch Mad Money, which I would not suggest, but I mean, I watch it every night. Occasionally he'll punt on a name if he just doesn't know anything about it. But for the most part, if you call him, hey, Jim, what do you think about Coinbase? What do you think about, Mero? What do you think about Bitcoin? He's going to have to give you an opinion. And, his opinion is not, he's not going back and researching anything. He's looking at it. If it's going up, he's going to tell you buy, buy, buy. If it's going down, sell, sell, sell. And, and he just seems to have this reverse Midas touch that's just amazing. So, I look at these as trading vehicles on both sides. So from time to time, the consensus is right. So, the long Kramer right after, and again, I don't know, if you guys track this stuff, but when NVIDIA had their earnings and they came out with projections that just blew everybody away because they, before NVIDIA's earnings call, we all knew, all right, AI, whatever. NVIDIA did their earnings call and made projections on how much they were going to make from AI. And everybody, me included, was like, holy crap, this is way bigger than we thought. All of those stocks ramped. And the long side, went up some ridiculous amount, like 20% or something, in a month. Eventually that'll come back. But, we look at them as trading vehicles. When you want to go long the consensus, you buy LJIM. When you want to go short, you buy SJIM. So we owned LJIM for a while. I just sold it in my personal account the day before yesterday, which was good. Started buying a little bit of SJIM this morning. So, it's a product I love to trade.
Yeah. So, okay. So you're making, and I know the basics. I saw the long Jim. I know the short Jim. You rebalance it once a week?
No. So, I mean, we're watching Jim, Mad Money every night, Squawk on the Street every morning from 9 to 10. Mm-hmm. And we're compiling his recommendations, what he likes, what he doesn't like. And what we're trying to do is I want 22 holdings that represent his favorites. And, watching Jim, as long as I've watched Jim, you always know what his favorites are. And so, sometimes he'll make a big call and we'll make a change. So the other day, he's never been positive on Carvana. And, Carvana is one of those meme stocks. He came out positive on Carvana. Like, we got to have Carvana in the portfolio. A couple of weeks ago, or maybe a week ago, I don't remember exactly when, he came out positive on Coinbase. He's never positive on Coinbase. So I had to have Coinbase in the portfolio. So we're looking for those big calls.
Yeah. And like I saw at one point you had mentioned like that it was oversold. How much is out there and how many people are in it?
So when you run an ETF, you've got no idea. You don't know who your shareholders are. I know that, the long Jim has a little over $1 million in it. The short Jim has like $3.5 million in it. What that represents, I have no idea. I mean, that could be 3 people. My guess is, though, from watching the volume, we see the volume go up in 1 and 2 share amounts. So my guess is there are a lot of shareholders who have a very small amount of shares, but that's just a guess. I really don't know.
Yeah, it sort of took off through like Reddit and like just the memes of Jim. It's one of those things where I feel like it is almost like one of those things where a lot of people probably have it just to have that one to just say like, hey, yeah, I got this.
Yeah, I mean, looking at the volume, that would be my guess, is you've got a lot of people who just bought, a share here, 2 shares there.
Okay. And I tried doing some analysis of it the other night. There's not a ton of data just for length of time and everything like that.
Yeah, I mean, we launched beginning of March. So We've only been around for, what is that, 4.5 months.
Yeah. So compared to the market, how are you doing compared to the market, and how are you doing compared overall?
Yeah. So, I mean, LJIM is kicking the market's butt because it's been in those magnificent seven stocks, which have been leading the market. And then it's been in, a bunch of the ancillary names like Adobe. We also picked up a company that my guess is probably our top performer, a company called Schrodinger, which is a healthcare company, but they use AI in healthcare. And again, anything AI is ramping. And the short side's getting its butt kicked. When we first launched, the short side was killing everything. And again, then NVIDIA announced, their earnings projections, and that flipped the script entirely, which is, again, why I like having both sides, because, then I sold all of my short JIM and I bought long JIM. So, it doesn't matter to me. But, SJIM's getting its butt kicked and LJIM's doing great.
Okay.
And yesterday that script was flipped. SJIM had a great day yesterday when, we saw Tesla and Netflix sell off. And then the bigger news, which no one's talking about, is Taiwan Semiconductor saying outside of AI, they're really not seeing any growth.
Yeah. With Taiwan Semiconductor, I know that's made the news a little bit here and there. Was there any truth to Warren Buffett selling all of his stuff and some of the scandalous stuff that's sort of been talked about it?
I mean, could very well be. The thing with, holdings is you don't really know. Would have to wait for him to file his 13F. But, Taiwan Semiconductor is a canary in the coal mine for everything because, they provide the backbone of all the semiconductor stuff.
Yeah.
So when they came out yesterday, the night before yesterday, and said, hey, we're not seeing growth, I think that's what really took the market down yesterday. And then the fact they're in Taiwan, and I mean, who knows, how long Taiwan is going to be a sovereign state, and what China would do to Taiwan Semi. So a lot of stuff up in the air there.
Yeah, no, it was sort of a tinfoil hat thing that I was reading the other day that was like Buffett selling all of this. Then there's another congressional member that was like shorting it like crazy. And some because there was some big plans about how the US wouldn't allow Taiwanese scientists that build a lot of that stuff to be taken over by China. And so, if that's where people thought it was going, the tinfoil hat stuff just sort of amazes me how people connect these dots sometimes, or make these dots connect.
Yeah. And I mean, I love the tinfoil hat stuff. I mean, typically when you see something, maybe the answer isn't what you're seeing, but I always think where there's smoke, there's fire. And I know in the market, there's a reason the rich get richer, and a lot of this stuff is manipulated.
Yeah. No, there's a lot of manipulation, which is sort of hilarious because people try to present Web2, the stock exchange, those markets as being like clean and crisp. And, and I'm like, have we not learned anything from like The Wolf of Wall Street or any of those other movies that sort of, the Boiler Room? Oh, man.
I mean, you've got that on one side, but then you've also got on the other side, the big hedge fund guys, the rich guys. I mean, they're all trading on inside information. Stephen Cohen, he was too big to jail. Everyone knew it. Everyone who worked for him was trading on inside information, but somehow he didn't know anything about it. Yeah, I mean, that stuff is rampant. There's inside deals. There is a reason the rich get richer, and then they tell the individual investors buy and hold, oh, don't worry about that 30% loss. You're a long-term investor. Don't worry about it.
That's one of those things. It's always that, don't worry about 30% loss. It's normal. But then if, it's 60% loss and you still have faith in it, you're crazy.
Well, I mean, Wall Street will get you to keep holding, convince you can't time the market. You're a long-term investor. It'll come back, all of that stuff. And then, that's all bullshit.
Yeah. I don't know. It's when a lot of people ask me, they're like, "Oh, I don't want to get into crypto right now. The market's down." And I was like, isn't, I go back and I'm like, let's quote Warren Buffett: "When there's blood on the streets, you buy." So if something is down 60, 50, 90% from its normal price range, if you can see that it is not something that is about to die, that's why it's going down, but it's just, the market is down in itself, DCA in, have a little bit of fun,
Yeah, or again, the way that I trade and the way that I teach people to trade is, not necessarily, I mean, maybe blood in the streets, but look at it from a counter trend basis. I would much rather buy something that's gone down a lot, started to stabilize, and then starting to move back up than, something that's just going up in a straight line and trying to get a spot. Typically that's not going to work. So I would crypto's the same thing. I'd much rather buy crypto, Bitcoin when it's at 17,000 than when it's at 31.
Yeah. I think that's sort of the standard. Well, I agree with you 100%. So you have no argument from me there. How hard is it to make an ETF? Because I was looking through some of the stuff the other day and I was like, wow, there's a lot of inverses, and you've made a few inverses as well.
Yeah, I mean, we've made a lot of inverses. We've made a lot of longs. I've got like 10 different ETFs that are in all various stages of filing right now. It's not difficult. There's obviously a cost to it, and there's an ongoing cost, which means you've got to get assets in it. So I get people calling me up all the time. Oh, I want to launch an ETF. I want to launch an ETF. And, what they don't realize is you could have the best idea ever. It doesn't matter. You look at, some of these big ETFs out there, BlackRock and Spiders, they've got billions in them, but they suck. But, those guys can market them. If you can't market it, you can have the best ETF in the world. It's going to fail. So a lot of ETFs launch, a lot of ETFs fail. Our struggle typically is we do some really weird stuff. So, every ETF's got service providers. We've got to convince the service providers to take our idea. Then there's a board of directors. We've got to convince the board of directors, and then there's the SEC. So it's typically harder for me in one of my ETFs. I mean, I'm working on something right now. I've already been turned down by 2 custodians who don't want to touch it with a 10-foot pole. I've got a 3rd custodian that I had to change the name. So far, so good with the changed name, but I mean,
is this the one that you hinted at yesterday?
It's possible.
Okay.
It'll be a controversial strategy. And I, right now I'm being censored like RFK Jr., but hopefully they'll let me have it out.
Yeah. That seems to be sort of the thing. Censure without reason or without, I guess, what is the right way? Like I was listening to RFK sort of getting censored by just like people trying to bring in regulation procedure of votes to have, where a vote is supposed to be a yes or no. And then they want to go on a diatribe to take up time from everything. And so that's to me has just always been a circus, and I love watching it because you learn so much about the internal politics and like the internal party lines. The party lines aren't what they used to be, and which is sad on one side, but interesting on the other. So start to finish, you come up with an idea for an ETF, you put it all together, you file your paperwork. How long does the paperwork itself take?
So everything all kind of in, you're looking at, 3 to 3.5 months. And,
Okay.
with my stuff, probably more like 4.
Okay. So then this takes us into the time frame of we now have one of the biggest ETFs, or most look forward to ETFs in a while, the Bitcoin ETF by BlackRock, and everyone else on the back end of that. What is the piece for that?
What do you mean the piece for
Like,
that? I mean,
so I guess we both had the same idea the other day. It wouldn't have been filed if they didn't think Larry Fink was going to get it.
yeah, I mean, Larry Fink is one of those guys. I cannot imagine he does something like that on spec.
Yeah.
He's probably got, all the guys at the SEC on speed dial, and, he knows what he's doing. So I would expect he's going to get that out.
Yeah. Do you have an idea of a time frame on it?
I mean, I'm sure it's going to take a while. The SEC is not going to go down easy on that one.
Yeah.
So, so once you file it, typically the SEC has 75 days. I think this will be longer than 75 days.
Okay.
How much longer? Who knows? Again, what does he know? What does he not know? All that remains to be seen.
Okay. And what do you think that's going to do to the market? Do you look at this as a good thing or a bad thing, or are you neutral on it?
If I were a crypto guy, I would look at this as a good thing, because BlackRock, has a lock and load on marketing from a lot of different aspects. Number one, they're into all the big financial advisors. They're approved at all the brokerage firm platforms. So, you see some of the other Bitcoin ETFs out there, they may not be approved at like, Merrill Lynch and Wells Fargo and UBS. BlackRock's going to be approved. So that's going to open it up to all of the brokers, all the financial advisors. BlackRock will be approved on every platform. That's number one. Number two, BlackRock does model portfolios. And what you've seen is a lot of guys in the financial business. I mean, financial planners, financial advisors, they're not out there picking what to do. They're putting their money in these BlackRock managed portfolios. So if BlackRock decides, hey, we're going to put in Bitcoin for like a 5% exposure, you're going to get an explosion in demand for Bitcoin. And it's not going to be a transient exposure. It's going to be a buy and hold. I want Bitcoin 5% of my portfolio type of exposure. Yeah. So, I think it'll be huge.
How do you see that's going to correlate into actual Bitcoin holdings? Do you feel that's going to, BlackRock has enough Bitcoin right now to cover this? Or do you think, obviously they don't necessarily need to, but what do you think that's going to do to Bitcoin itself?
Well, I mean, if there's any way for them to, and again, this is your guys' area, not mine, but if there's a way for them to, figure out how to mine for more, I think that's what they're going to be looking to do.
Okay.
Because I can't imagine they're going to have enough.
Yeah. So you think that they're going, one of the next big investments that they might do are in mining facilities?
Could very well be.
All right. Where do you see the tokenization of assets going? Do you see that becoming a big thing?
So I mean, I think that's the future of a lot of stuff. Yeah, you look at the sale of assets right now, and in houses, cars, all that stuff. It's so inefficient compared to the technology that's out there. And, and I had someone explain the idea of tokenizing your house to sell it a couple years ago. And I'm listening to it. I'm like, oh my God. I mean, that's, it sounds like the future to me, which, thank God I'm not a real estate agent. It seems like that's where, the sale of assets is going to go.
Yeah. Or even just for me, I look at it, not even the sale, but the proof of documentation. We see the state of California operating soon on Tezos for car titles. So car titles will be on chain for proof of ownership, and registrations, which it's not any financial tool. It's just that now anyone can have access to this and have that proof of history to it. Do you think that there's going to be, and I know this might be a little bit out of your wheelhouse, do you think that there will be more of a push of fractionalized ownership of assets, or complete and total digital tokenization of single assets?
So, I don't know. I had a conversation about a year ago with a group that is doing fractionalized ownership of sports memorabilia. And they wanted to try to I talked to them because they wanted to try to put it into an ETF, which under current technology rules, laws, it's impossible.
Yeah.
I found the idea interesting, but not interesting enough that, and again, I'm older. So, but if I want a Babe Ruth rookie card, I want it. I don't want to own 5% of it and you own 5%. And I want that card. I want it in my house. I want it in a safe. You come over, I'm like, hey, Taco, look at this. I got a Babe Ruth rookie card. How cool am I? The idea of owning 5% of that, it doesn't work for me.
Yeah.
So, my sense is, again, someone who is older and, can't teach an old dog new tricks. I don't like the idea.
Yeah. And so you went with like a smaller asset there. Larger assets, like one of the ones that pops to my mind is H.R. Geiger, the director and the creator of the Alien xenomorphs creatures, had a big art sculpture piece that was fractionalized. And so instead of one person owning the whole thing because of the cost of it, it was fractionalized out to many owners that then had a say in what the museum did with it. So if they ended up selling it, all of those fractional owners got a piece of it. They got free entrance to go see it whenever they wanted to. Not as easy to move around as a rookie card.
Right. Yeah. I mean, I could see that working. I could see private jets or boats where, the idea to me of owning a boat, I would never want that. But if you said, hey, Matt, you want to own 5% of a boat and you can take it out every once in a while and you don't have to worry about the maintenance. Yeah, you know what? That may be interesting. Or, the idea of, hey, you can own 5% of this private jet and, you can use it for, 5 or 10 trips a year. I mean, that would be interesting.
Okay. Yeah. I hate to use the word timeshare, but almost.
I mean, yeah. I mean, it works. I mean, there's a reason those are somewhat popular.
Yeah. They're still, no matter how many times I see ads of let me buy you out or lawsuits of timeshares, they're still around. They're still being created like crazy. Sometimes under different names. But it's still the same thing. What has you excited right now?
What has me excited? Not a whole heck of a lot, just from the standpoint of, I see a lot of the stuff that's going on, politically, internationally, inflation. Yeah, I'm worried about a lot, unfortunately. I'm always excited about advances in financial markets. So things like a spot Bitcoin ETF are exciting. But, kind of looking at the landscape and in what's going on out there, I mean, there's a lot of scary stuff. And, I'm not a doom and gloomer. I mean, when I was growing up, we were convinced that we are going to get blown up in a nuclear war any minute. That didn't happen. So, chances are all the stuff that people worry about aren't going to happen and everything will be fine. But, it's tough to sit here and get excited about a bunch of stuff.
Okay. Well, it seems like we almost have that to worry about nowadays as well. So it's repeating in a way, but I think sometimes that's an over worry, but it's one of those things that's just sort of getting out there. The fact that it's back on the table is just mind blown. So not a lot is interesting you. What about tech wise? What personally outside of markets, what sparks your interest right now?
I mean, AI, obviously that has the potential to completely transform everything we do.
Yeah.
Also has the potential to kill us all. So, we will see how that goes, but that could change everything. And and I've got 3 kids in their 20s, and I tell them all, I mean, make sure that you put yourself in some sort of role, some sort of job that at some point a computer cannot replace you, because there will be a lot of people, unfortunately, who will be replaced by artificial intelligence. Artificial intelligence doesn't take vacation, doesn't take breaks, doesn't complain. You don't have the same issues as you have with people. So that's exciting. I think we're probably, getting very, very close to maybe having some technology that, gets the world off of fossil fuels. And it's not EVs, it's not wind, it's not solar. I mean, it's none of that. But, I think we'll get to the point, certainly in my lifetime, where we'll see some sort of cheap energy developed, which I think also, if that happens, that changes the world. So, I think we're sitting on 2 potential things that could completely and totally change the world, hopefully for the better.
We saw, I think it was in December, it was released from, I want to say DARPA or JPL Labs, that cold fusion had been achieved for a few moments and stuff like that, where more energy was outputted than was inputted. And it was like one of those things that just sort of slipped under the radar really quickly. Nuclear energy, I think, is highly underrated. And
I agree. It's underrated and underutilized. I don't think, you're not going to put a nuclear reactor in my car, though. So,
Mr.
But
Fusion,
from the standpoint of cities and things like that, definitely.
Yeah, it's worrying some when we see states going more towards renewables that are weather adverse. Wind and solar, I believe, hold a really big value and a really big part to be supplemental, but not primary. We saw this during the last winter. We saw like Quebec, they're mostly renewables. They got almost frozen out, and it wasn't because, and the only reason they kept the heat on was because they pulled power from New York. Right. And now New York wants to go completely renewable by 2030. And it's just some of that just doesn't make sense to me.
I mean that stuff is scary. I mean, to me, whatever you think of fossil fuels, until we come up with something else, and again, it's not wind, it's not solar, it's not lithium batteries, it is what it is. I mean, if you want to talk about tinfoil hat stuff, we've all probably seen the footage that the New York Times leaked about, those Tic Tacs that, the Navy saw and was tracking, and Congress is talking about all this stuff, and, UAP task forces. One thing I've not heard anyone wonder is what propels those things.
Yeah.
To me, that's as interesting as who's flying them, because I doubt you plug that in to an electrical power grid. I doubt there's oil and gas in there. There's something else.
Yeah.
Which at least means that the physics of something that's not fossil fuels is a possibility.
Yeah.
It may be 1,000 years ahead of our thinking, but it's possible.
Hey, it could be salt, in some form of way or fashion. No, that's I can go down the tinfoil rabbit hat for forever. I start watching like Instagram videos or YouTube reels, and next thing you know, I like to say I'm learning how to speak giraffe, because I just like, I'm just like, oh, next, like, and the algorithm just takes me down those holes. And who knows? Man, all right, so back to sort of what we cover a lot on, in blockchain. Anything have your eye there that either you think is really cool, infrastructure wise, token wise, tokenomics, the recent SEC Judge Torres ruling, that was sort of a Ripple and SEC win. What has your eye there?
I think there's a lot of stuff that's got to get fleshed out. Is crypto a security? Is it fall under the SEC? Does it not fall under the SEC? I mean, right now it's not a security. One of the guys who works for me, my trader, he's like 28 years old. He trades everything. And, and we've talked with this about the SEC, because, in my business, if you work for me, we need to capture your trades and be able to show them to the SEC. And, we've decided, hey, we don't have to show them our crypto trades, but they are very interested in all things crypto. And I've spent, a lot of time, so what's your policy on crypto? Well, I mean, I run ETFs, I can't, but they are very interested in finding out about crypto. So, is crypto a security? If it is, and it's SEC regulated, what are the implications of that? What are the implications for Coinbase? And then, what's the future? Because if you look at, currencies, the dollar, the pound, the euro, all that stuff, you could definitely make an argument. All that stuff's outdated. But then you look at the idea of digital currencies, and again, conspiracy hat, tinfoil, conspiracy theory, tinfoil hat stuff. I mean, do you want and do you trust central bank currencies? What can central banks do? You see kind of, the social scores in China. Could that come here? Where then maybe, does Bitcoin or some other crypto that's not issued by a central bank, does that actually become currency? Does that supplant some other things? And I think all the developments in that and where all of that goes, and I have no idea where it's going to go, but I think all of that is going to be fascinating to watch.
Yeah. We had a comment from someone. So for those that are joining us, we are a little late. We are talking with Matthew Tuttle. And just want to reset a little bit here. We are welcome to TacoBytes, episode 337. And we are with the one and only Tuttle Capital, Matthew, the founder and creator of both the SJIM, the inverse Kramer, and the long Jim, to sort of go against and go with Jim Cramer in the large scheme of things. I personally am mostly a long man. I feel like having faith in the markets, having faith in projects is what drives us forward. Do I short occasionally? Yes, because I'm not dumb, Do I 200x leverage and go to sleep? Yes, I do. Do I recommend that? No, I don't. but I seem to do better. I seem to sleep better when I'm on a 200x leverage than I do when I'm on like a 5x. It's really weird.
Okay, that's
Yeah.
cool.
Hey, and there's been times where I've done like a 10x leverage and totally forgot that I put in that long position and come back to it like a week later. I'm like, what up? Oh my gosh.
I'm a billionaire.
No, I wish. I if I had played certain cards right, if I had kept all my Doge, and if I'd kept my Bitcoin in like 2013, this would be a different conversation, But I used it as the tools they were at the time, a form of cash and payment. I didn't really look at that long term like, oh, this is going to be generational wealth. I'm like, I need money right now.
Yeah.
So like that's the move. Those are the moves I made. I tell this one of the things that I was in Doge really early on when it, so 2015, 2016, when it was just, we were handing it out like candy because we were getting it like candy. I gave out 1 million Doge tip one time because someone sent me a funny meme, So at the heyday of Doge, you could say I paid someone $250,000, $750,000 to make me laugh,
Nice. All right. I will remember to send you memes from time to time then.
Yes. I will send you, I'll send you some Zen.
All right.
Are you on top of everything else, like crypto wise, like the big things that are going on?
No, I mean, the only things I watch, I watch Bitcoin and I watch the miners. Mara is always, something I like to trade. And, I had a lot of fun a couple months ago shorting Coinbase, not shorting it at the moment. But, I love trading both of those stocks. And, and then I'll trade the crypto ETFs from time to time. But, I like trading the miners because I think you just get more, more bang for your buck. Because again, I'm not, I'm older. I have no problem trading ETFs. The idea of setting up an account at some exchange and, trading crypto, I'm not there yet.
Yeah. One of the comments we got on Xenon. So we're streaming for those that are joining us, and then Matt, just so you know, if it matters, you fell off on Twitter.
Yeah, you're right. I did.
We are streaming to 2 YouTube channels. We are streaming to Twitch, a Discord channel, Telegram, LinkedIn. Video for this conversation is in the Jumbotron of us on Twitter. As well as we are streaming to Lens Protocol on chain through Xenon. Someone just, it wasn't a question, but they when you were sort of talking about SEC, they made a comment that they just don't want to see us win. Do you feel that might be an overreach of a statement, or that if the banks don't make the money first, that trickle down effect, you can have our pennies?
So, and hopefully there are no SEC examiners on this call. I'm always dubious of government agencies. A lot of times they don't know what they're doing. Other times you worry about the motivation, because a lot of these guys will work for a government agency, not because, hey, I want to work for the SEC my whole life. I want to go from the SEC to BlackRock or something like that. So yeah, they have, what they think are people's best interests at heart, but there are often other motivations, other cross currents, and and I've gotten into battles with them a lot. I mean, we did the first single stock ETFs in the US, and that was a battle. They did not want them. The rules were written against them. The rules made no sense. I explained it to them. They're like, yeah, we don't care. But, to me, I've always looked at it from the standpoint, more tools are better. The more tools investors have at their exposure, the better. Yeah, if I give you a hammer, might you hit someone over the head with it? You might, but I still think you deserve to have access to the hammer because most people are going to use it to hammer in a nail. So, I am dubious of what they're doing. When you look at it from an ETF standpoint, other countries have had spot Bitcoin ETFs for a long time, Canada being one. Why don't we have it here? Do I want them coming in and making Bitcoin a security? I don't. I don't think it is a security. I don't really know what it is, but I don't think, when I think of the definition of a security, I don't think of crypto, but they're going to do what they're going to do.
Yeah. And we saw with Judge Torres's ruling, and my interpretation of Judge Torres' ruling is that secondary markets, where the buyer doesn't know who the seller is and the seller doesn't know who the buyer is, that it is not a security, but that the way the institutional sale happened does fall into the rulings of an SEC oversight as a security. Do we might see, this is sort of maybe a question out of depth, and that's okay. The way seed funds are done, or might be large ticket sales on open markets, but as like a lot sale, like you can buy this many tokens at this discounted of a price, but it has to be this many tokens minimum ticket type of thing that might be a stretch into being clear and not a security before. And those lots have to go first before any open market sales happen.
Yeah, I mean, I don't know. The areas where I think you want to have SEC scrutiny, in securities is insider trading, which I believe is rampant, but which would be massively rampant if we didn't have the SEC oversight. And one thing that I find very interesting in that regard is up until Raj Rajaratnam, which was a big hedge fund guy, Galleon, I forget exactly when he got sent to jail, but he got sent to jail for insider trading. And the SEC was doing stuff they've never done before, wiretaps and all that, which they've never done in an insider trading case. Up until that point, all the big hedge funds had been outperforming the market. Hedge fund performance dropped off after that. And I would argue all the hedge fund billionaires were like, holy crap, this isn't worth it. We're going to stop. So I think, SEC scrutiny there is important. I think SEC scrutiny on, trading from the standpoint of, me not being able to take advantage of you is important. Does it add anything in crypto? I mean, you can insider trade Bitcoin. On the trading side, I mean, maybe, but yeah, to me, it's a little bit of a stretch. But again, I'm also typically not a fan of government regulation on stuff. I'm more of a libertarian.
Okay, I like that. I don't know, like I have 1,000 questions for you. Are you willing to, if anyone's willing to come up or wants to come up, are you willing to take some questions that might be out there?
Yeah. I mean, if I can answer them, I'll answer them. And if I can't, I'll tell you I can't.
All right. So if there's anyone that wants to put a question in on YouTube, on Twitch, or in Telegram and wants to type a question in, please do so. If there's anyone that wants to come up on stage in Twitter, please do so. We have someone amazing joining us today, Matt. I think, it's sort of cool to see, this is one of the things where I do. One of the events I hold regularly at conferences is pitch competitions that really throw people off their game because they come in with like 60 slides. And then I tell them, no AV, you have 5 minutes and then 5 minutes of criticism and then 5 minutes of Q&A. But then I have a VC panel to where they can sort of hear the insides of what's going through a VC's mind, and ask fireside chat questions. So if there's anyone that wants to come up and ask any questions about either side of the market, please put in those requests. We'll have you come on up. Matt, one of the things that, do you see a lot of investments still moving into layer ones, into NFTs? Where do you see it from your bird's nest?
So I don't really see that from my bird's nest. We're typically, dealing with, retail investors who are buying, stocks. Mm-hmm. And so, we try to put out tools that allow them to, do that more efficiently. Maybe, option replacements, or not having to do margin, or, being able to short in an IRA. So that's much more, my focus. NFTs are one thing I just, never wrapped my head around of why you'd be buying some of this stuff. And I think a lot of people got crushed on some of that. But that is certainly not my area of expertise.
Okay. All right. It's almost like a breath of fresh air sometimes when people say that's not my area of expertise, rather than just saying, well, here's my 2 cents based on, because I sort of come, I have a finger in almost everything that I can, just so I can have a basis of an opinion. But I love when I say, like, people come to me with questions way out of the blue sometimes. And I'm like, oh, I actually didn't know that, because I was looking over here to the left when that happened over here on the right, or that happened behind me because that happened a few days ago. So you put out a newsletter, and I asked that people give you a follow on Twitter. Is there an easy link to get your newsletter?
Yeah. So if you go to my website, TuttleCap, so TuttleCap.com, it should pop up right there. Also there's a link on my Twitter, which is at Tuttle Capital. So, okay. Either way.
Yeah. All right. And so to bring this back a little bit to regulation side, we were talking that you think that the Bitcoin ETF will be a really good thing for crypto, for just Bitcoin, crypto as a whole. Do you think it has a long way to fight the stigma that everyone has sort of made crypto as a dirty thing? Or do you think as soon as that BlackRock ETF comes out, it's clean now?
So I think crypto as a whole, how long that's going to take, I don't know. But the way product development works in my world is someone comes out with something and then they build out. So, everyone's fighting to be first on the Bitcoin ETF, but you don't need 50 Bitcoin ETFs, and the market isn't going to support it. So what's going to happen is the Bitcoin ETFs are going to come out. They're going to be trading. The SEC is going to see it's not the end of the world. And then someone's going to say, all right, you approved a Bitcoin ETF. What about Ether? What about Tether? What about this? What about that? Which is, so the first ETF that we had, I think it was 1993, it was SPY, S&P 500. And, we've got a couple other S&P 500 ETFs, but now, it is ballooned. You've got ETFs for everything. You could see that on the crypto side. I mean, once the SEC says, hey, all right, Bitcoin's okay, why not, these other things, as long as the infrastructure is there to support it. Obviously, the infrastructure is there to support Bitcoin. You get anything else that's got an infrastructure, at some point, someone's going to launch an ETF for it. And at some point, that someone could be me. We're playing around with some ideas on the Bitcoin ETF. And that's another thing we're trying to get done. And, we're not getting censored on it, but, we're having some issues, getting custodians to do that. But, I do plan on doing something in the spot Bitcoin field that's going to be different. And, I'm certainly going to look at some of these other coins and see, hey, can we get something out there on these?
Okay. I don't know if you can talk on it yet, but if there was an ETF you could create for any crypto, what would be the requirements for it? What would you want to see in that token or that coin?
Well, I mean, first and foremost is something the SEC is going to approve, and and that I could find a custodian to hold it. Those are going to be the key things, because without those two things, I'm dead in the water. Beyond that, it's got to be marketable. So for us, we need about 20 million or so in assets in an ETF just to break even. So, if you say, hey, Matt, I've got this obscure coin that nobody knows about, me launching an ETF for that, probably not going to be that interesting to me, because unless I can figure out how to get 20 million in it, we're just going to be eating expenses every single month. So it's got to be something that's marketable.
Okay. And so now once you get that, do you have to then sell it to different marketplaces for them to list it, like Robinhood?
No. So Robinhood, so like Robinhood and Fidelity and Schwab and all those guys, it's there day one. The only issues you have are like, the brokers, the Merrill Lynches of the world, they put up gates. And some of the, independent brokers, the Linsco Private Ledgers and Raymond James, they'll put up gates. But on stuff that retail guys are trading on, their whole idea is we're open architecture. We'll make everything available. So no, we'd be available on all that stuff.
Okay. And then where do you see, so do you have any issue with FedNow, or do you have any thoughts on FedNow?
Not something I know about. No.
Okay. All right. Then
I do have thoughts on the Fed right now. Not a huge fan of the Fed, but I do not know what FedNow is.
Okay. So that will be their, I don't want to call it necessarily blockchain, but it will be their payment rail systems for instant settlements between central banks to lay the groundwork. It can lay the groundwork actually for a CBDC. And I have I feel that it's on the horizon. It's going to be happening sooner than it is later, especially now that FedNow, there's some big pieces with XRP and Ripple technology being used as a railment system, as well as like XLM and a few others. So it's interesting to see if that will push a little bit more info into that, and see how instant settlement on blockchain happens within the Fed system. So what is your thoughts on the Fed right now?
So I'm not a huge fan of the Fed, because what you've got is, you've got a guy, Jerome Powell, who I would argue from a economic policy standpoint is the most important person in the country. And he's unelected and basically unaccountable. I mean, yeah, the president could fire the Fed chairman, but if you remember back to Trump would say bad things about Powell all the time. Trump never fired him. Trump fired everybody. If Trump wasn't going to fire Powell, nobody can fire Powell. So he's got massive power, and he's got a dual mandate, which sometimes fights against each other, which is keeping inflation down and keeping unemployment down, where right now he's in a situation where he's got to ramp up unemployment to get inflation down. And I don't like that idea. So right now, if you're poor or lower middle class, the Fed is saying to you, hey, you can't afford food, you can't afford gas, but you have a job. What we're going to do is we're going to make it so you can afford food and gas, but you know what? You're going to lose your job. To me, I'd rather have the job. So, and they're also the guys who got us into this mess. They can, inflation's transitory. They got addicted to quantitative easing, keeping rates at zero for too long. And, and the market got hooked on that. And now they're trying to unwind it. So far they've been lucky. I mean, lucky if you're not a, Silicon Valley Bank shareholder or a Signature Bank shareholder. They haven't created a lot of ripples except for a few regional banks going bust. But, we'll see. We're not done with the process yet. But, giving power, that much power to someone like that who is not elected and virtually unaccountable to the president and Congress, that worries me a bit. So, and I'm a free market guy. Let the free market decide with some sort of safety mechanism if the free market goes off the rails.
Yeah. And do you see, so we have the FOMC meeting coming up this week. Last time there was talk that there was going to be a rate hike, but it was put on pause. And we see markets go different ways when that happens, rather versus another hike. What do you forecast? What are you forecasting?
So, I mean, they're going to hike at the next meeting. And then the big unanswered question, which I have no idea, is what happens after that. And the other problem I have with the Fed is, someone who is trading, it's at this point, it's all about the Fed. What's the Fed going to do? Is the Fed going to hike? Are they going to cut? How long are they going to keep it for? And then you have the Fed speakers. Every day, right now they're in a blackout period, thank God. But every day you have a Fed head come out and they say something. And, and the market moves based on that. And, as a trader, all the time you've got to look, all right, what Fed heads are speaking today? When are they speaking? Oh, I want to buy this. I want to, I'm going to wait for this Fed guy to come out because he could say something that could ramp the market or could drop the market. It's really annoying. I long for the days where they had their meeting, they had their press conference, and they just shut up. And they weren't really as important. Now the markets are moving solely based on, right now you've got the AI stuff in here. But before AI, it was solely based on what people thought the Fed was going to do. And we'll get back to that. Once AI kind of runs its course, and besides the one rate hike, I don't know. I do not. There are probably still some people who think they're going to cut rates this year. I don't think that happens. I think it's a while before they cut rates. I think they're probably more hawkish than most people are thinking. But beyond the next meeting, your guess is as good as mine.
My guess is not. I don't want to put out scare tactics or anything scary. I don't see rates going down anytime soon. I think that they've almost sort of dug themselves in a hole that they think that the only way to dig themselves out of it is by raising rates to a certain point that will. I feel that there's too much contagion on it, that it's one of those things where they have to. And then we see where the chips lie and they see who they can collect. I don't know if it's purposeful, like who can we make fail this week or this cycle to get control of, because I one of the things that just leaves a really dirty taste in my mouth is when we see banks collapse, and all of those assets are usually, the banks collapse because they're buying US government bonds. And I don't think anyone, and me personally, I don't think anyone should collapse because they have enough faith in their government that they're like, we're going to put in a long position on you. And then now that makes us toxic. But now that we collapse, you can go sell our assets and all of a sudden they're no longer toxic. So it's an interesting thing. And you were talking custodians earlier. We've seen in the crypto world, a lot of the custodians that played a part in that sort of being shuttled out. I think there's one of the big ones that is left that even like Coinbase is using, Binance, Kraken, that they've all moved to is, I want to say Citizens Bank out of Pennsylvania. I think is what it is.
Could be.
I'm probably wrong on that, but I remember it's out of Pennsylvania, and we've seen a lot of banks move to that because they're the only ones doing the 24/7 payments. Using current market tools, I always find this funny. For a market that's open 24/7, that's almost dictated by who can put out the funniest meme, yet we're using stock market TA tools to predict a market that's dictated by memes sometimes. What do you see that? Do you have your own tools of predicting crypto markets, or you said you have a guy that that's what he trades?
I don't listen to him. So yeah, I mean, I'm a big chart guy, support areas, resistance areas, and and I prefer to buy something that's bouncing off of some support area or undercutting I love something where, so let's say you've got support at Bitcoin at 15,000. I love stuff that maybe breaks 15,000, shakes out all the scared money, comes back above 15. That's where I look to buy stuff. Okay. And then when I look to short is, let's say you've got resistance at 30,000, it starts bumping up against 30,000 and can't get through, and then starts to move back down. That's where I love to short. So that's what I do. So I'm constantly surrounded by charts, and I'm looking for spots to buy things or to short things, and I'm agnostic between long and short. Sometimes, and it's my biggest weakness, I'll get focused in, so I screwed myself on Tesla yesterday. I got focused in. I want to buy the dip on Tesla, and I saw it hit support. I saw it bounce. I bought the dip. It went down. I got stopped out. Okay. One time, great. Then it found support again, started to bounce. I bought it again. Meanwhile, I'm sitting there like, I should have just shorted it. I'm stupid. Yeah, I didn't do it a third time. And, last time I looked, it was down again. So, I could have compounded my mistake, but stupid me, I just should have shorted it at the open.
Yeah, hindsight's more than 2020. Hindsight's million of you.
It's not hindsight. The setup was to short.
Yeah.
And, my rules would have said short it. And instead I had my mind, people are going to buy the dip. People are going to buy the dip. People are going to buy the dip. And I forgot about my rules and just got focused in on buying the dip. And I missed the short sale.
Yeah. Oh man, I remember the days of having rule sheets, and it was one of those things where people thought, yo, you're just using a cheat sheet. I'm like, no, this is so I take my heart and my brain out of the equation, and something that I already predetermined is my formula, and I follow my formula. If my formula works more often than not, then it's good. If I start to see failure in it, that's when I need to change my formula.
Yeah.
So one of the things, okay, oh man, I have the bad problem of going in 1,000 different thoughts. What do you want to talk about for a minute? What questions do you have for me?
I don't know enough about all the cool stuff you're doing to even ask an intelligent question. The whole crypto, blockchain, NFT world, from the standpoint of the stuff you guys are getting into, I'm clueless. It's fascinating. The one thing, where it impacts on my world, you talked about settlements. Settlements for securities trades right now is just a mess. So, I do believe the blockchain has a future for securities. There's a T+2, but nothing settles on time. My trader, half of his day is tracking down settlement fails. And, so to me, if I buy a stock right now, it should settle right now. I mean, in this, I get it, back 100 years ago. Yeah, it couldn't. I got to run across the street. I got to talk to this guy. I got to run over there. Yeah, it's going to take a while. But
Run
today,
with your ticker tape.
What's that?
Run with your ticker tape.
Yeah, but today, if I buy a stock right now, why can't it settle right now? It doesn't make sense to me. So I think that's the future of where blockchain is going to impact my world. But I mean, all the stuff you guys are involved in, I wouldn't even know enough to ask an intelligent question.
Oh, that's where I have you fooled. There's intelligence here.
I mean, it's so different from the world I grew up in. Like I said, I mean, I've got kids in their 20s. They're like, Dad, how did you grow up without a cell phone? I'm like, we just did. Mom rang the bell when it was dinner time and we heard it.
You mean we remembered people's phone numbers? We
remembered people's phone. I mean, I don't know my kids' phone numbers. Don't know them. They're speed dial.
Well, hey, at least you've gone far enough to set them as a speed dial instead of just like, hey, Google. Oh, wait. No, stop. Call so-and-so.
Yeah.
Right now, every phone I have around me is trying to do a thing. We actually have a hand up, Eskimo.
Hi, Matthew. It's
Hi.
been to hear you talk. So I've been listening the whole time, and I had a couple of specific questions, but one thing, Taco, you just brought up, does Matthew have any questions for you? And he was talking about the space of NFTs. And one of the things that came up for me earlier was the ideas of communities, memes, creating communities, using memes, and all of the tools that we use in Web3, whether that's conferences, Twitter Spaces, Discord, all of the different Telegram. And I think that's one of the places that I think it might be interesting to talk about the difference between TradFi and whether it's Web3, trading in crypto, is that there's at least, you may have people that that also trade Tesla. You might get on calls and talk to people about that. But I think it's different in the crypto world in terms of communities and spaces that run for 24 hours and people talking about coins. And it's a much wilder world, I would say. That's where the NFTs also find their own communities. I think the combination of things like financial trading and artwork, and just thought I would throw that out there as a subject matter we could chat about.
So let me condense that to make sure you were talking more about the community spaces that are grown around tokens and NFTs and the power that they have.
Well, yeah, I think, and this is like too broad of a brush, but how would you think about communities in the way we think about it in Web3 if you were to apply that to traditional finance? I just think it's a very different mix of, it's another, we talk about sentiment analysis, or we talk about, whether a coin or has a strong community as a factor of being able to identify possibilities or probabilities of it doing well. And I think it's different than traditional finance. I just thought that it would be fun to talk about that, perhaps from Matthew's point of view, from your point of view.
Yeah, and I do have a view on that. In traditional finance is different from traditional finance. So I don't see the communities in crypto, but I've gotten very involved in the communities in finance because I think it's fascinating. Back, after, COVID and the market was kind of in a bubble, I would talk to reporters a lot who would be like, hey, Matt, isn't this like the internet bubble, which, I was a broker for back in the late 90s? And, and the answer is no, because back in the internet bubble, the stockbrokers had all the information. You had to trade through them, and investors weren't connected. The level of connectivity you've now got in these investor communities on Discord, on Twitter Spaces is just amazing. And, the analysis, the information. So I'm sitting here every day. I've got 3 Discords going. I've got Twitter going. And if I'm not listening to someone on the Discord, I've got a Twitter Spaces on in the background, because that allows me to, have my limited watch list, because there's only so many things I can watch. And then I know there are all these other groups, and they're spitting out, hey, Tesla, Netflix, this and that. And it allows me not to have to watch those names. And it's also a way around, because like I said at the beginning, I think the advice you get from Wall Street is stupid. The stuff you see on CNBC is awful. But the analysis you hear, and again, it's got to be, you've got to know the right people, the right Discords, the right Spaces. There was just the case, the SEC came after, the Atlas guys for, doing pump and dumps. You got to avoid that stuff, and you got to know enough to avoid it. But the level of convect, and you saw it with, they took down Melvin Capital. And that's probably not an isolated incident. You've got, all of these hedge funds out there shorting stocks based on fundamentals. And, unlike individuals, they can't unwind their positions in 5 minutes. They're probably going to have to unwind them over days. So I bet we're going to see more GameStop situations and more situations where, individual investors take down hedge funds like that. Individuals now in securities have such power that they didn't have before. And Wall Street still hasn't wrapped its head around it. And I would assume the same thing, would happen in crypto. So, from a sentiment standpoint, a couple of years ago, a couple months after COVID, you saw a few ETFs launch where they said, what we're going to do is we're going to see what stocks are the most talked about. And those are the stocks that we're going to buy. And in some aspects, that was a smart idea. In a lot of aspects, it was stupid. Because just because a stock is being talked about on Twitter doesn't mean that that's going to be a good stock. But if you were able to do it and you were to say, hey, look, I've identified 20 smart guys on Twitter. I want to see what are those guys talking about that. That would be a home run. And my guess is you could have something similar in crypto where, I don't care what the 18-year-old or, the 20-year-old guy living in mom's basement, playing video games who knows nothing says, hey, this is going to $1 million. But if you could filter through who are the smart guys, what are they saying? Something like that could be very interesting. But again, this level of connectivity that we've got, in the crypto space, in the stock space, I mean, it's just fascinating to me. And it creates, opportunities for people to educate themselves that we've just never had before.
Has it changed how you trade? Does it bring in other factors for you? Yeah,
without a doubt, because, again, I've identified a bunch of guys who are really smart. And, when they say something, I'm looking at it. And, and it allows me, because before, I'd maybe be trying to watch like 50 stocks. Now I've got 16 stocks in front of me and I'm just listening to what's going on. And, and a lot of times Someone mentions something, I'll look at it. Boom, that fits my criteria. I'll take it. It's like having my own research department without having my own research department.
Do you use a lot of different tools for market sentiment and analysis, or is it you have your own?
No, just the charts. So they're patterns I'm looking for. So if I hear someone on a Twitter Spaces say, "Hey, I'm buying Tesla," I'll look at the Tesla chart. You know what? That's a pattern that I like for a long trade. This guy I think is really smart. I mean, I've been listening to him. I might buy Tesla there.
Who would you recommend people sort of maybe follow on Twitter?
So again, on the stock side, there's Eliant Capital, ELIANT_capital. There's, Miss Izzy is great. There's Special Sits Research is great. Hedge Fund Telemetry. I'm sure there are others. I mean, I like Ripster. He's a good one. I mean, those are probably the 5 I spend the most time looking at.
Okay. And then I'm a little jealous. You said only 3. You're only part of 3 Discord groups.
1, 2. Sorry, 4.
Oh, you're only part of 4. Okay, hey.
I mean, there's only so I've got 8 screens, and there's only so much I can watch.
Oh man, I'm
typically if you're on screen 7 and 8, I'm gonna forget to even look at screen 7 and 8.
I'm in 153 Discord groups. That's almost a requirement for getting into a project these days. Join our Discord, okay. And I'm like, no, I can't. I miss the days of having multiple monitors. Right now, I just do stuff on 2, but I used to have those, two vertical monitors that I could have multiple screens on, and so it was almost like I was doing 5 screens at once. I remember seeing there's this laptop attachment that adds, I think it adds 8 more screens. I
got to get that for when I travel. Because when I travel, it's tough trying to just do stuff on a laptop.
Yeah. Do you go to any crypto events? Any fintech events?
I haven't. I mean, I go to most of the ETF events, and we have one in Florida that's usually the week after the Bitcoin one. So 2 years ago, the whole world went to the Bitcoin one and then went to the ETF one. And last year, not so much. It wasn't nearly as popular. But, one of these days, because I'm already going to the ETF one down in Florida. One of these days I'll go down early and go to the big, especially, I mean, if we can pull off what I'm trying to pull off on the Bitcoin ETF side. And I've had a lot of, I've had a lot of disappointments. We filed for short Bitcoin when Bitcoin was at 60,000, and the SEC told us to withdraw our application immediately. That would have been epic.
Yeah.
Then we tried to get it in again, but we were going to be number 2. And the guys I was working with on it were like, let's do it. I'm like, no, you don't want to be number 2 for short Bitcoin futures. So I got another idea. Hopefully that'll work. And if we're in the space, then I'll definitely go to the Bitcoin conferences.
Okay. One of the big things that a lot of people sort of think affect both mainstream markets and blockchain markets are ESGs. And I have my own views that are sort of picked up from those that I think are smarter than me. Do you see those playing a big role, especially from BlackRock?
So what's your so to me, ESG is environmental, social, and governance.
Yep.
Okay. Yeah. So I'm not a fan of ESG. To me, from an investing standpoint, when I buy a stock, I'm buying a stock to make money. I'm not buying a stock to change the world. If I want to change the world, I'll buy the stock, make money, and use that money to change the world. I'm not a fan of what BlackRock is doing, trying to force companies, to be more ESG. To me, we've got politics and we've got corporate. Larry Fink, no one elected him. There's no accountability there. So to me, those types of policies should come from elected officials. Not a big fan there, but BlackRock, State Street, Vanguard, if they want to push ESG, they're going to push ESG, and it's going to be a big issue. And, you're starting to see, blowback. So, the red states are saying we're not touching anything ESG, and the blue states, are going to have the ESG mandates. Congress is talking about it now, and we'll see where that all unfolds. But as long as BlackRock, State Street, and Vanguard are pushing companies to adopt ESG policies, they're going to adopt ESG policies. And and if anyone thinks Strive is going to change that, they're a drop in the bucket. I like those guys. I know them, but what they're doing is gimmicky, and it's not going to change. It's not going to move the needle.
Do you think that where we see some tie-ins to BlackRock and the UN and the IMF having a say in this stuff as we start to see what looks like monetary control and programmatic money having a say?
Yeah, I mean, all that stuff scares the crap out of me. I'm not a fan of the globalization idea. Again, central bank digital currencies. I think once you start moving down a lot of those paths, it's a very slippery slope to, ending up somewhere you don't want to end up.
Yeah. I want to be really cognizant of your time. I don't want you to miss out on any good trades or move markets today.
Yeah, no, market's not doing anything.
Okay. One of the big questions that people always want to know is we always talk about what ifs and looking for this, looking for that. But the real thing, and, I don't know if you can speak on any of this. People want to know what's the easiest way to make money, or what should they do? It's one of those things people always want to know. What should they do? They're like, well, you just gave some great information. I feel smarter. I know more about the world, but I don't know what to do with this.
So there is no easy way to make money. If there was an easy way to make money, the Forbes 400 would be the Forbes 40,000. Anything in making money is going to require a lot of work. Money is a zero-sum game. For me to get money, I've got to get it from somebody else. Yeah. And so, it's not easy. So, and what I tell people is, if you want to make a lot of money, besides, being born into a wealthy family or, inheriting it, which is the only easy way to make money, you've got to work your ass off, and you've got to be smarter than the competition. So, ask yourself, do you want to pay that price? And if the answer is no, that's fine. But, don't expect that you're going to work 4 hours a day, and be a multimillionaire. It's not going to happen. If you do want to make money, to me, there are two things that stand out. Number one is learning how to trade, whether that's crypto, whether that's stocks, whether that's both. Because if you know how to trade, and not the stupid stuff we saw coming out of COVID where people were putting up YouTube videos, hey, if something's going up, I buy it. And when it starts to go down, I sell it. And, now all those people have lost everything. But really knowing how to trade, you can sit down in front of a computer, any place, anywhere, and make money. The other thing is knowing how to sell. If you know how to sell, there's a demand for you. And AI cannot replace. I don't think AI is going to learn how to sell. AI is going to write books. AI is going to do secretarial tasks. AI is going to be able to do a lot. I don't think AI is going to convince me to buy a car or convince me to buy a stock or convince me to buy whatever. So, to me, those are two skills. And, and then the other thing is just, trying to figure out a need and satisfying that need, thinking outside of the box, that's how we approach ETFs. I don't approach ETFs with, what's out there. I approach ETFs from the standpoint of, how can we create a need, or, how can we fill a need, that's out there that no one else is going to think of, doing something totally outside of the box.
Okay. Out of the box, we see AI being used as a trading bot, and people are only really posting their wins, or they're making exaggerated claims. Overall, bringing TA into it, I feel TA most of the time is emotional. If you're not going off of a rule book and you're drawing a chart, it's emotional. So like it could change in 15 minutes. One of the things I used to do is I would do TA on a chart, and then I would go do my shower, shave, and breakfast, and then I'd come back and I'd do it again, pen and paper style, just to see how it shifted, and it usually sort of was a little shifted, but I could see a box of where there was an overlap. Do you see that AI is bringing a lot more pattern recognition into it?
So, pattern recognition is always, and again, I'm talking about the stock side. I don't know about, the crypto side. There's always pattern recognition in things out there. You look at, a firm that, you guys may have heard of, Renaissance Capital. James Simons, he was a, CIA code breaker, and they're the most successful hedge fund of all time. And nobody knows exactly what they do, but it's all computers, it's all that stuff. And you've got other firms, other hedge funds, D.E. Shaw and those guys doing that stuff. So, if you're looking to kind of think outside the box, and, you're not going to beat those guys at their game. You're also not going to beat the guys at fundamental analysis. One of my boys works at a very big hedge fund. He's brilliant. And everyone who he works with is brilliant. And they spend all day, every day doing fundamental analysis of companies. If they want to get the CEO of any company on the phone, they just pick up the phone and they get the guy on the phone. You're not competing with those guys. That's what I love about technical analysis, because the other thing those guys can't do is they can't compete with what you're doing. My son will call me up, be like, hey, Dad, we're getting killed on this stock. I said, well, you got to look at the chart. He's like, it doesn't matter. Even if, the chart told me to get out, it's going to take me 5 days to get out. We've got like 20 million shares. I can't get out in 5 seconds. It's like, all right, too bad. I can get out in 5 seconds. So that's where we as individual traders have an advantage, is I can look at the chart and I can put my entire position on or get my entire position out in a matter of seconds. The big money managers can't do that.
And why is that?
They're too big. The size they're dealing with is too big. If I've got 1 million shares of Apple to sell, I can't do that in 5 seconds. But if I'm looking to buy 1,000 shares, I can do that in a second. And so that's where our advantage is. And that's where people took advantage of Melvin Capital and GameStop. If Melvin Capital wanted to cover their GameStop position, it's not like they hit a button and they cover. If I'm short GameStop and I'm getting my ass kicked, I get out of my position in 5 seconds. It takes them days to get out of their position. And they're moving the market the whole time. That's the other issue too. You're a big hedge fund. you own a massive amount of shares. Even if you take 5 days to get out of position, you're moving the market. And even if you're sending that trade around to different brokers, if you need to get out, they know you need to get out, and they're not going to make it easy. They're going to take their pound of flesh. If I need to get out of Apple, nobody knows I need to get out of Apple. No one's going to try. I mean, I'm going to be able to get in and out of stuff very efficiently. So that's the advantage that we've got. And and I would assume, a similar thing applies in crypto. Like if I'm a crypto whale, I can't move with the same efficiency that, an individual can move.
Yeah. I think it's sort of, there's a bunch of different tools in crypto. One, people, slippage for, you can drop it, but slippage is sort of put in automatically, and it will, as drop that price by you selling, it will round it out and it will give you an estimation. And we see, we see some big market moves from that. I think that as more things go on chain rather than paper trading, we'll see, those markets shift. We see the difference between DeFi, decentralized exchanges, where anyone can go and do anything, no permissions needed, and then centralized exchanges where it might be a paper trade or it might not be. How quickly you can offload all of that and spreading your eggs, I guess, amongst baskets. But it's one of those things where there's usual buyers, or the market will move itself, and that liquidity behind it to move it. We see a difference between AMMs and open order books, and so I see a lot of this cool stuff moving in back and forth. Going to sort of prediction models and stuff like that, and AI, how big of a role do you think Aladdin is playing in everything right now? BlackRock's Aladdin.
So I don't think AI is anywhere near the point where it can add any predictive ability to the stock market. I think the stock market is way too random, and I don't think AI. I mean, you need experience. It's not just skill. You need to know what lens to look at what you're looking at, where, one pattern, looking at it in one lens is a short and looking at it in another lens is a long. And I can't imagine AI is at a point where it can do that yet. I mean, if we keep, bringing it along, yeah, I think it could get there. I think it's possible. I think that could have other, downstream ramifications that I can't quite wrap my head around what they would be. If all trading is done by AI, then I think, the human can fade that. So, I don't know what that looks like. It'll be interesting to see, because I do think if more and more trading gets done by machines, I think it'll create more opportunities for humans, because you could start to think, all right, the machine is going to see that and they're going to go along here. So, I can front run it or I can fade it. So, I mean, I think that could get pretty interesting.
Okay. And it's funny that you bring up front running, because I was going to sort of go into that on a little bit. So one of the things that covers into is like bot trading, and script trading. We see a ton of markets move just by scripts and market, market bots. Do you think that takes away from the market, and makes the market move more than it should with all of these bots trading? Do you think the market has caught up to the tech?
Yeah, I mean, I don't know. I think, on the whole, technology should theoretically settle things down. But whether it does or it doesn't, quite honestly, I don't know.
Okay. And do you see, I guess, well, a lot of the bots, all that they're doing is arbitrage. They find it, at a slightly lower price somewhere and a higher price, and they're trying to make that balance between different pools, and beat that price. Do we see that in modern markets?
Oh yeah, I mean, you see all sorts of stuff in modern markets, but markets adapt. So you had the what they call them, the flash boys back a few years ago, where it was just all about speed, and then they created other markets, and markets adapted, but people are always going to find something. Again, and the guys at Renaissance have consistently stayed ahead, and they're all MIT, scientists, code breakers. I mean, the guys with the 5 million IQs. I mean, those guys are always going to be able to find something. But then it's adapting because markets adapt. So, back in my earlier days, a lot of the strategies that we would do would all be machine related. So now I'm discretionary. I'll look at the market, make a decision. We used to do that all by machine. And what we found is we would have to continually adapt. So, back, 15 years ago, I was running models that would move on a monthly basis. And we got to a point where it's like, we can't do monthly anymore. Markets move too fast. All right, now we're going to do weekly. We can't do weekly anymore. Markets move too fast. Now we're going to do daily. And it got down to where we're doing stuff intraday, and then it just got crazy. So, all right, screw this. I'm just going to trade discretionarily now, because we can't keep up from a machine standpoint on how market dynamics are continually changing. So it's, which is again why I'm dubious of AI being able to do that, because again, it's not just, hey, I found something, I'm going to keep hitting it. Eventually, that's going to stop working. And, either you adapt or you lose a whole lot of money.
And so earlier you talked about one of the things that you do is you do trading lessons, right?
So I don't do trading lessons. I'll put out my watch list every morning. From time to time, I'll tweet on Twitter, hey, take a look at this, take a look at that. I'll contribute sometime on the Discords I'm on. Hey guys, I'm buying this, or, hey, here's what I think about this. And, and people hit me up on Twitter. What do you think of this chart? What do you think of that? And, I'm starting to do some more stuff on YouTube. So we've got a YouTube channel now that I just started a couple weeks ago. But, that's all I've done there.
How often do you do live YouTube, or do you do pre-recorded?
No, I do pre-recorded. I haven't figured out how to do live yet.
Okay.
I'm still new to all this technology.
All right.
So, typically I'll be sitting here on like a Saturday or a Sunday and just, hey, this is what happened in the market. This is what was just noise, because usually it's noise. And this is what you really need to pay attention to.
All right. We got, I'd love to, if there's any tips or tools that I've learned through the way, I'd love to help you out on that. I
may hit you up on that because I'm trying to figure it out.
Hey, one of the coolest things that I've learned in Web3 that is different from modern markets really is modern markets. It's I buy first and then I tell people after a moment, where, or after I make profit, I tell everyone what I did. Web3, it seems there's a lot more sharing of education and information, which, sometimes is an overload because you don't know what information you need to be listening to, what education is more important right now. I just want to give a quick shout out to everyone that's joining us via YouTube. And I say YouTube because we're going to 2 YouTube channels right now live. We're going to Telegram live. We're going to Twitch, Xenon, and Twitter, and video in Twitter right now. So there's a bunch of people that are watching via just the Twitter video. So want to shout out to all of you. Want to shout out to everyone that's joined us via the Twitter space so far. We got some really cool people here, everywhere from DeFi Dex. We even have Gala Music, Taco Gala in here. in a way, they sort of trade futures of music. You can sort of get in on music of an artist if you believe in that artist, and that music is going to bring something. There's value created in that by owning it. So profit sharing seems to be the biggest thing in Web3. So we hear two terms that get used a lot. One of them I don't like because I think it undermines what's really happening: economic theory and game theory. Using game theory on tokenomics and using on how to interact with the market versus economic theory. Do you see that in modern markets versus, or those terms, do they come up for you?
Not in the traditional markets. They don't. No. I mean, economic theory. I mean, I always tell people you need to understand the macro kind of backdrop, what's going on, because that's often the lens you want to look at things. So, if I'm looking at a chart and, in the macro backdrop is one way, that might be a short sale, where if the macro backdrop was another way, well, that may be a long. And, I don't trade based off the macro backdrop, but I always want to be cognizant, because then that also tells you, you'd like, if I see something going up, I would like to know why. I won't necessarily only trade if I know why, but I feel more confident in the trade if it's like, okay, I see the dollar going up. I get it. I understand why the dollar is going up. I'm going to go long the dollar. Versus I see the dollar going up. I have no idea why it's going up, but it's going up. I'm going to go long.
Okay. What is your average hold time on a position? Whether let's long.
I mean, I have a very short attention span and not much patience for losses. Yeah. So I will take losses quickly and get back in if I need to get back in. But I could hold something for 10 minutes. I could hold it for a week. It really all depends. Lately my hold, this year, my holding period has been a lot smaller. One of the things I'm also always kind of looking for is the rotations, because, in traditional finance, money rotates. So it'll be in tech, it'll be in the consumer discretionary stuff. And then, fully invested portfolio managers get scared and they move it to, Coca-Cola and Pepsi and Procter and Gamble and utilities. And I want to be watching for those moves, and I'll move with it. So, I'm not a fan of buying something and holding on to it forever, up and down. There's no problem with that. It's just, I have no patience for losses.
Yeah. All right. And then, I guess, we're gonna, let's wrap this up. I want to thank you, Matt, so much for your time and everything, joining us today. If there's any questions, please put your hand up. Please come up on stage, put them in the chats. It sounds like that you have an idea of Bitcoin, you have an idea of Ether. Any other L1s or L2s or any other tokens on your radar?
No, it'll get on my radar if it's something that I can turn into an ETF. Then it gets interesting to me. Either that I can turn into an ETF or someone else turns it into an ETF and I can trade it. Because again, I'm too old to set up a cold wallet or a hard wallet, on some exchange and be trading crypto. Yeah, I'm an ETF and a stock guy. That's the stuff I'm going to trade.
I feel like you're just like not raising your hand, but raising your hand for some help there. And I want to walk you through it all, because
one day, I may get dragged kicking and screaming. And if I do, I'm going to need some help.
I got you. So, all right, then if you're saying if you can turn it into an ETF, you're for it. I'm sure it's come across.
I'm for all of it, but for me, I'm for it if I can turn it into an ETF.
Would you?
I think crypto is great. I love innovation. And, and like I said, I think, currencies in a lot of ways, shape, and forms are obsolete. I love crypto. I love the idea of it. I'm just, I stick with what I know. And again, I've been trading stocks for 40 years. I'm very comfortable doing that.
Okay. I saw some really funny ETFs out there, and you've done, you did DARK, which is an inverse of Cathie Wood's.
I did SARK, which was an inverse of Cathie Wood.
SARK.
And then we've got a 2X version of that coming out, hopefully within a month or so.
Okay. I also saw, I don't remember what the right term was for it, but it was basically white chick ETF. Basically, it was like what an average of 25 to 32-year-old white women thought. And it did, and that's what it was an ETF of. It was like Babes ETF or something like that.
Wow, I don't know how I missed that one. I haven't seen that one. I've seen a lot of wacky stuff, but that one I missed.
What are some of the ones that you've seen that just either make you laugh? You're like, oh my God, that's like, how did that happen?
So it's not as much make me laugh, because I don't think there's anything that's really made me laugh. And there's a lot of stupid stuff. I mean, you had a guy who actually looks like Donald Trump do a MAGA ETF. And I mean, it's gimmicky, because again, I'm I don't like ESG. I don't like that. I mean, when I invest, I want to make money. And the fact that, and I don't know what his criteria is, but the fact that it meets some MAGA theme, to me, doesn't mean a company is going to make money. Same thing with ESG. And then what it does is it limits, my investment universe. Someone tried to come out with a Nancy Pelosi ETF, but it wasn't a Nancy Pelosi ETF. And, if I had Nancy Pelosi's trades in real time, that's a home run. But you don't get her trades in real time. I mean, congressional, they've got to file it, but you've got a 45-day delay. So, that doesn't work. You've got the bad ETF, which is, alcohol. I mean, it's basically the vice stuff. Again,
sin ETF.
What's that?
The sin ETF, tobacco.
Yeah, the ticker symbol is bad, but it's all sin stuff. Again, gimmicky. If I'm buying an ETF, I want to make money. I'm not looking to laugh. I'm sure there have been others, but those are the ones that kind of stick out.
The inverse Kramer had to make you laugh, though.
Oh yeah, I make myself laugh.
Okay.
I mean, again, wait till you see what we got coming. I'm going to make myself laugh with that.
I laughed about it last night.
Other people typically don't make me laugh.
I laughed about it for a while afterwards, and that's yeah.
I mean, the inverse Cathie Wood made me laugh when I saw the Twitter reaction to it. It was not positive when we filed. Once people actually started making money, it flipped and everything was positive. But at the beginning, there were a lot of funny comments that, I mean, luckily my mother was not alive to see them. She would have been horrified.
Yeah, it's weird on some of that stuff. And so a lot of that, do you think that the bots on Twitter have as much market manipulation as people say they do?
I don't know. I mean, you see some stuff on Twitter that doesn't make a whole heck of a lot of sense. But I'm not a Twitter expert. 2 years ago, I didn't even know what it is. I mean, I got 7,000 and change followers now, which I don't know if that's me. What's that?
+1 from me.
Oh, all right, cool. I mean, I don't know if that's good or bad. But my thing is I don't block anybody. I mean, I have people attack me. It's like, okay. I mean, I'm a free speech guy. You want to say something mean? Go ahead. I mean, I'm not going to block you. I mean, I guess I would if you said, hey, I'm going to come to your house and shoot you. All right. Yeah, I'll probably block you.
Report it first.
What's that?
Report it first.
Yeah, report it, then block.
Yeah.
But yeah, I don't block anybody. I mean, someone just said something mean about me this morning. I was like, okay. Sometimes I'll even respond and be like, hey, funny one, you got me.
Yeah.
Whatever. But yeah, I don't know. I mean, I gotta figure if I'm Russia and China, then yeah, I probably got like thousands of people sitting in rooms, doing stuff on Twitter and trying to shape public opinion. I mean, that would make sense. I would do that. And if I were the US, I probably would have people doing that, trying to mess with people in Russia and China. I mean, it just makes sense that people would do that.
How much do you see social media forming instant opinions that might not always be right?
So I don't know. I think it's got the potential to. My theory on life is question everything. There is no such thing as an expert, and there is no issue that has necessarily been settled. And use my own common sense in what I see. So if someone tweets out something, I'm not going to automatically be like, oh my God, that's true. I'm going to regard it with suspicion. And and I see fake news tweeted out there. I mean, someone, I remember this vividly, someone tweeted the other day, Hillary Clinton just collapsed and was rushed to the hospital. It's like, holy crap. And then I start looking around. I'm like, I don't see anybody else picking that up. That's probably fake news.
I saw one of the sad ones for a second. Fran Drescher passed away.
Oh, okay.
And then that got debunked. And
yeah,
I think but that was carried by major news organizations.
Right. I mean, to me, you question everything. There's no such thing as an expert. Every generation thinks they figured everything out, and they haven't. I mean, in the 1900s, early 1900s, they wanted to shut down the patent office because they figured everything that had been invented had. So I don't believe anything I see. I'm going to form my own opinion on it, regardless of what social media says. Does it have the potential for people to see something that's not true and believe it? Sure. Okay. Do I think that's a bad thing? No, because the alternative is we don't have free speech. And again, I think that leads down a slippery slope.
Yeah. We just had, not just had, but I think it was maybe about 2 months ago, we had one of those AI pictures of like the Pentagon or some Capitol building explosion.
I saw that. And the market moved for a second on that one.
Yeah. Do you think that some of the fail safes that have been put into the market since the 2008 are capping gains and capping losses that should be in place or that should be allowed?
So, I'm not a huge fan of a lot of the fail safes. I am from the standpoint of you get something like whacked, but normal market movements I think should be allowed to happen. I mean, we had a day, August 24th, 2015, where something went wrong and everything. I mean, stocks were opening up down 60, 70%. And I think that was wrong. It wasn't, it was a glitch somewhere. I think you need fail safes for something like that. But, other stuff, I mean, the market is a survival of the fittest. If I see the Pentagon exploding on Twitter and I automatically believe that and it's wrong, to me, that's my bad. I need to independently verify that the Pentagon did actually blow up.
Yeah. That comes into that do your own research in a way type of thing.
Do your own research. Don't believe what you see. Especially these days and we're going to see more and more of it.
Yeah. We're going to wrap this up now. I said that a few times, but final thoughts and words. Matt, it's just been an amazing time talking with you. And I've had some side questions come in, so I've hit those up, come in privately and stuff. Man, words of wisdom and final thoughts.
So, words of wisdom, educate yourself. on whatever it is you're doing. So, I mean, if it's investing in the markets, educate yourself on that. If it's investing in crypto, educate yourself on that. Understand what it is you're doing. And, to me, that's the biggest thing. And then, that's what I tell people around money and markets. You can delegate, but, Wall Street is unkind to people who don't know what's going on.
Okay. Yeah. Thank you so much for joining us today. This is TacoBytes, your daily bite of Degen, episode 337. We have Matthew Tuttle, the founder, the creator of the long gym and the inverse Kramer, the short gym, talking markets, BlackRock, BTC ETF, and who knows whatever ETFs you might come out and create next. I'm waiting for the Pepe ETF and the Zen ETF and the Hex ETF. We'll see, what those do, or other proof of work chains come out.
I'm in.
Or even the tokenization of musicians, the Taylor Swift ETF. So thank you so much for joining us. And as always, we close with two things: my words of wisdom and final thoughts, as well as the best worst knock joke on the face of the planet. My words of wisdom are always the same. A closed mouth does not get fed, and you cannot feed a closed mouth. Meaning, if no one knows you're looking for opportunity will never come a knocking. And if opportunity does come a knocking and you're not ready for it, it's going to keep on walking. And my final thoughts are, in line with you, Matt. Do your own research. Find different people that you can trust, that you can verify, and different sources. Google is a good friend. Google is a bad friend. Twitter, you never know. But it is a big piece on market sentiment, and a lot of stuff happens there. And we end with the best knock joke on the face of the planet. This is done out of respect and honor for those that came behind me and those that come before me, and reminding you to always tune in and tune out. But are you ready for this, Matt?
I'm ready.
Knock.
Who's there?